Ladies and gentlemen, please join me in welcoming Mr. Neeraj Chadavar. Neeraj is known for providing actionable advice that empowers investors to make informed decisions. His New Year Picks 2025 are not just stock recommendations, they are a roadmap to help you navigate the market and achieve your financial objectives. Let's welcome Neeraj and unlock the potential for a successful investment year. Neeraj, over to you.
Thank you and very good afternoon to everyone for joining and taking time out for our New Year Picks webinar for 2025. Before starting, could you please confirm, am I audible clear?
Yes, Neeraj, you're audible.
Yes. So before starting, this is our standard disclaimer. So let's get started. So first of all, we extend our warm wishes for Happy New Year to all our readers and all our listeners. And we welcome 2025 and looking forward to this year with full of prosperity, peace and happiness to you and all your family members. So in today's webinar, I will divide the webinar into four parts. First, we will spend some time about what has happened in 2024 as a rear view mirror. What is our outlook in front of us for 2025? Under this outlook, which are the standout themes one could sail through with this volatile outlook of 2025? And at last, what are the best investment opportunities available in this period of 2025? So without wasting time, let's get started. Start with what has happened in 2024. So 2024 was a very solid year for not only for Indian equity market, but at a global front also. We have seen for the first half of 2024, with every passing quarter, Nifty was scaling high, and with this, on 26th of September, Nifty touched an all-time high level of 26,216. This milestone has pushed the Indian market cap to reach the market cap of $5 trillion. And with this, we become the fifth largest market in the world. And this is one of the biggest milestone achieved by Indian equities in the recent time. With this milestone, now we have reached for at a global front. Now more and more global investors are now looking at India as a structural opportunities. Now if I divide the performance of 2024 into two parts, the first part was a very solid year. The first half was a very solid rally in equity market led by multiple reasons. The first reason was robust macroeconomic indicators, the narrative building across the policy continuity because we had an election in the second half, then strong domestic and foreign liquidity, along with that improving high frequency indicators and by and large supported by the earnings momentum. However, when we progress towards the second half, the volatility started building in the market, and we have seen the volatility has emerged and increased over the month when we progress towards the December. There are certain reasons behind the volatility in the second half. The first and foremost reason was below than expected performance of ruling party in the election, then slowdown in high frequency indicators, then slowdown in earning momentum starting from some slowdown in Q1, then again some slowdown broadened to multiple sector in Q2. On top of that, starting from October onwards, we had seen the FI selling based on the valuation concern and some tactical bets shifting towards China as compared to India. On top of that, we have seen the rise in the US 10-year bond yield and the dollar index. Even with this, Indian equity has given a solid double-digit return in which our mid and small cap index went up by 24% and 26% in last 1 year. And our benchmark index Nifty 50 grew by 9.3%. So this is a stellar performance year, repetition of 2023 in 2024. Now with this, now we are entering into 2025 and we are welcoming 2025. So what is the outlook for us for 2025? First of all, what we believe that the faith in India growth story is continue in 2025 and going forward. Indian economy is a star performing economy as compared to other emerging market, and we firmly believe that the growth momentum will sustain in 2025 and our country will emerge as a land of stability against the backdrop of volatile global economic landscape. We believe that political stability after the recent state election, fiscal support will boost further confidence in the economy. And what we believe that going forward with every passing quarter, there is likely to be improvement in the economic health of the nation. And what we believe that FY26 likely to be a better year as compared to FY25. For FY25, we are projecting Nifty EPS to grow in a single digit of 7.6%. That is due to the subdued earning in the first half of FY25. But what we believe that most of the negatives in the earnings are already priced in. Going forward, we likely to see the improvement. That's why for FY26, we project 13.7% growth in Nifty EPS and 11% growth in FY27. Overall, we forecast 14% CAGR growth starting from FY23 to FY27. With this, what we believe that this double-digit earning growth will translate into a double-digit returns from the market at least for next 2 to 3 years, which is well supported by capex recovery, real estate cycle, and the strong construction activity. On top of that, the strong rural recovery expected in the upcoming quarter. So it means that double-digit return is expected from Indian equities in upcoming years. Based on this, what are the key monitorable? Now, what is the challenge? The path for 2025 will completely different from path of 2024. Now we are entering in 2024 with two macroeconomic events. The first macroeconomic event, which is closely monitored by the market, is policies in the US government during the Trump presidency. We know that the new Trump government will be formed after 20th of January. We need to see and we are closely monitoring the policies will be adopted by the new Trump presidency. Market is keenly watching that development. On top of that, market is keenly watching the development around the trade policy which will be implemented under the new Trump regime. On top of that, market will also follow and also closely monitor the US Fed rate cut decision for 2025. We know that in the recent FOMC meeting, US Fed has projected 2 rate cut for 2025. We will be closely monitoring those rate cut, and what we believe that if there is a rate cut, that will be in the second half of 2025, not on an immediate basis. On top of that, the direction of the currency and the direction of oil prices are very critical for the market going forward. This is about the global scenario. Let's come down to our own economic scenario or our own macroeconomic regime. What we believe that at a domestic front, market will keenly watch the development around the upcoming budget, which is scheduled on 1st of February. Also, market will keenly watch the rate cut cycle, which likely to adopt by our RBI, which likely to kickstart from April 2025 onwards. All these will have a bearing on the market. On top of that, There is a very interesting scenario which has emerged from the recent conclusion of the state elections. What we believe that in the recent development or the recent conclusion in the state election result, we have seen the dominance of the ruling party, which was not there in the 6 month back when we had concluded the union election. There are several factors which is attributed to for this dominance of the ruling party in the Maharashtra election. The standout and the biggest factor was the Ladli Bahan Yojana. This program was a roaring success for the women voters, in which we have seen that they have lined up for the support of the program. This indicates a shift in the economic regime. The past decade of the current government is marked has resulted into lower allocation towards the social schemes in last 10 years. Capacity creation has its own advantage. This would be very sustainable. This will provide more sustainable growth, job opportunities in a longer run, but this also reducing social scheme which has resulted into the rural distress, because not more money has contributed towards the rural and social scheme. What we believe that with this Latki Behan Yojana could be the new success mantra in the Indian politics, and going forward we could see a larger allocation will be going towards the social schemes going forward. So that what we believe that this could emerge as an economic change in the economic regime in next 5 years. So we will have to closely monitor these change in the regime as and when the data comes in. What we believe that these events will likely to keep Indian equity market volatile, and market could respond in either direction based on the development. What we further believe that the first half of 2025 likely to be more volatile, because more and more macroeconomic developments are linked in first half. However, more concrete developments are expected in the second half. So majority of the returns of 2025 will be backloaded in nature once market gets the clarity. In any case, we continue to believe the long-term growth story of Indian equity market. However, the current valuations are offering very limited scope for further expansion. So growth in the corporate earning will be the primary driver for returns expectation going forward. So that's why we keep our report title as earnings play to drive return in 2025. So based on the earnings play, it's a stock selection market, it's a bottom up selection market with focus more on growth which are available at a reasonable valuation, and the quality focused stock could generate a satisfactory return in next 1 year. We also ask our investor to buy on dip strategy in our newer pick stock with an investment horizon of next 12 months. Based on all the scenarios, we present 6 solid themes for 2025. The first and foremost theme is structural play of premium consumption. We know that as India is heading towards a 5 trillion economy, based on that, structural play of premium consumption is a journey towards a premium play in the consumption space. On top of that, the second theme is growth story in the Indian healthcare industry. That is nothing but the private hospital space continue to play as a structural theme for going forward. Next is that companies with higher growth potential in the infra value chain. Now we believe that market has reached and continue to value the value chain of the infrastructure system. That's why we are picking up the theme companies with higher growth potential which are contributing to infrastructure value chain. As the market is volatile, so we like some play of pharma and telecom as a defensive play. At last, two themes, that is real estate as a demand visibility play. As we know, we continue to bullish on the real estate cycle, and we believe that real estate has more milestone to go. And at last, a reasonable play of BFSI, well, in terms of valuation. So our all new year picks are a right combination of the rate cut cycle expectation in 2025 from RBI, a defensive infra value chain, and the combination of premium consumption. So based on this, we present 9 new year picks for 2025. So these are our 9 new year picks starting from Shriram Finance, Fortis Healthcare, Prestige Trade, City Union, Ambuja, Doms Industries, Ethos, Bharti Airtel, and Cipla. They do have a upside potential available from 17% to 31% in next 1 year. All these 9 picks are based on our 6 golden themes, which we believe that is likely to outperform in 2025, which we believe that it's a bottom up stock picking with focus on more earnings play. You could invest in all the 9 stock with single click in our by investing in our small case. So we are also launching a new year 25 new year picks 2025 small case with this report. You can invest in all the 9 ideas with one click with a minimum investment of 28,000 rupees. So this is a very solid small case which has a potential to sail through the 2025 volatility with the earnings play. Let's talk about what has happened in our last new year picks. So we had yesterday closed our last new year picks, which has generated an astounding return of 35.8% in last 1 year versus the Nifty return of 10.8%. These are the returns from 26 December 2023 to 26 December 2024. Out of 9 calls given last year, 6 already achieved the target. Few of the standout call of 2024 was Amber Enterprises, went up by 158%. Pitti Engineering went up by 95%, and Sansera Engineering went up by 48%, which is making our basket return of 35.8% in last 1 year, which has significantly outperformed the Nifty 50 by superior margin. Now let's talk about all the 9 stock in detail one by one. Let's start with Shriram Finance. Shriram Finance is a Nifty 50 company, is the biggest, one of the largest NBFC company, and this company will be the beneficiary of the rate cut cycle of 2025. This company is a prominent player into the CV financing space, and this particular player is targeting into the CV refinancing. And what we believe that the refinancing market is majoritarily conducted by the unorganized player who are controlling the market share of 50 to 55%. In last few years, the market share of this company has grown significantly from 12 to 13% 15 year back to 30% in the used CV space. What we believe that in next 5 to 10 years, this market share has a potential to reach up to 38 to 40%. And what we believe that after the merger of Shriram Transport Finance and the City Union Finance, Shriram City Union Finance, the merger enabled portfolio diversification. Earlier, the majority of the portfolio was targeted towards the CV space. Now, after this, the portfolio become less cyclical based on the merger of City Union and the Sriram Transport. The asset quality trend for this company is continuously improving, healthy and steady AUM growth prospect, and what we believe that this company is providing healthy return ratios with ROA of 3.3 by FY27. What we believe that currently stock is trading at a very reasonable valuation, in which we are targeting the AUM growth of 17% starting from FY24 to FY27, and the NIM growth and the earning growth of 17% and 19%. We are setting a 1 year forward target price of 3825 with an upside potential of 31%, which would be the potential market share gainer in the CV refinancing space. Second would be the market share gainer or the beneficiary of the rate cut cycle of the RBI, which likely to start from April 2025 onwards. So that's why is the standout candidate in our New Year picks, that is Shriram Finance. Let's move to the next stock, which is Fortis Healthcare. This is a part of our structural growth story in the healthcare space. We believe that healthcare has now reached as a structural story in the Indian landscape. We believe that Indian private hospital now seen as a structural story based on three pillars. One is that the private sector is growing at a faster rate in terms of oncology treatment and the cardiac treatment. The second growth lever is the penetration of the health insurance, which is growing at an industry rate of 18%. And the third growth driver for the Indian private hospital sector is the foreign tourism as a medical tourism. In FY19, in a pre-COVID year, 7 lakh tourists visited India as a medical tourism. During the year of COVID, we have seen dip in medical tourism, but immediately after that, on a year-on-year basis, we are seeing again growth part for the foreign tourists coming in India as a medical tourism. Now in FY25, the foreign tourists come into the India as a medical tourism, again likely to touch 7 lakh mark, which is equivalent to the pre-COVID level. And these are considered as a structural shift in the industry, and that is providing more comfort towards investment. And what we believe that these three structural levers provide more margin of safety in terms of growth in this particular sector. In this sector, we like Fortis, which is a mid-cap company, which provide a biggest treatment towards oncology and the cardiac surgery. Last year, 60,000 cardiac surgery, 11,000 radiation therapies, and 3,600 robotic surgeries done by this player Fortis, which is outpacing Max Healthcare and the Medanta, who are again the legend in the hospital space. What we believe that currently company is this particular hospital is operational with 4,500 beds. There is a huge expansion plan which is forecasted by the company to reach up to 6,000 beds in next 2 to 3 years, which is almost increasing of 45% of the current capacities, and all these expansion will be led by brownfield expansion, which will be having a quicker break even as compared to the greenfield expansion. Right now, the occupancies in the hospital segments are increasing. Occupancy increased from 55% in FY21 to 65% in FY24, which are again likely to increase to 67 to 68% in upcoming year. The average revenue for per occupied bed is also increasing with a rate of 8 to 7%. and which is likely to touch 70,000 in upcoming years. So this is a structural tailwind which can provide a good ROE expansion opportunity and good opportunity for ROIC to improve from 9% to 19% in next 3 years. We forecast almost more than 2x in the profitability of the Fortis by FY27 as compared to FY24. We set the target of 860 for Fortis, which provide a good upside potential of 28% in next 1 year, which is why Fortis leadership in specialty treatment like cardiac and the oncology, improving margins, bed expansion, and larger penetration towards insurance. So this makes a structural bet in Fortis Healthcare for next 1 year. The next company is into the real estate cycle. So we like Prestige State, a mid-cap company, a Bangalore-based company which is now entering into the other markets like Mumbai and other North Indian market. What we believe that this is a solid growth story based on the visibility of the pre-launches in upcoming quarters. Company has guided for 24,000 crore of pre-sales number in the current financial year, in which in the first half the pre-sales was almost equivalent to 8,000 crore. But what we got guided by the management, there is a huge amount of projects which are in pipeline, 3 to 4 projects which are in pipeline, which is expected as a gross development value, which is considered as a GDP of more than 50,000 crore, which what we believe that pre-sales of 20 to 22,000 crore is likely to realize in the current financial year, which is equivalent to the pre-sale guided by the management. Strong cash flow opportunity, and the net debt for this company is continuously reducing. Recently, company has raised 5,000 crore by QIP, which is utilized for the debt repayment. What we believe that strong cash flow, upcoming launches, geographical diversified, strong collection efficiency, and segmental diversified into residential, annuity, and the hospital business. What we believe that this provide a solid case for investment in 2025 with the current real estate cycle as a diversification candidate beyond Bangalore market. We set the target of 2195 for Prestige State for next 1 year, which provide an upside potential of 26% from the current level. The next stock is City Union Bank. It's a small cap bank which is growing at a very faster rate. It's a Tamil Nadu focused bank growing at a very faster rate. This bank is diversified into the MSME and the SME lending. What we believe that, as I was talking about the rural distress, there will be some allocation from the upcoming budget will be allocated towards the rural area. Some allocation will be given towards the strengthening of MSME and the SME environment, and this particular bank will be the beneficiary of that particular cycle. What we believe that improving visibility in the credit growth for upcoming quarter, consistent ROA delivery to drive re-rating. On a consistent basis, this company is delivering a solid ROA. We are forecasting ROA of 1.6% by FY27, and asset quality trend is continuously improving. What we believe that by FY27, this company able to reach 1.5 to 1.6 ROA, and the ROE is in the range of 13 to 14% from the current level, which provide a solid investment case to invest in a era of MSME and SME lending with a target price of 215 with an upside potential of 24% from the current level. Let's talk about the next pick, that is into Ambuja Cement, which is into infrastructure value chain. Now what we believe that infrastructure value chain, we call it as a cement space right now. What we believe that cement is the best investment opportunity for 2025. From last 12 to 18 months, we are seeing the consolidation in the cement industry. All both the big player Ultratech and Ambuja Cement are into acquisition spree. They are creating more and more capacities, and based on that, 2024 was a year was marked with the acquisition and the capacity creation. Now, what we believe that capacities are already being created. 2025 will be the year of cost optimization and the profitability increasing. That will be the focus area for 2025. Capacity expansion in terms of Ambuja is targeting 118 metric ton of capacity, and this combined capacity likely to increase up to 140 MTPA by FY28. What we believe that this capacity creation will drive the revenue and volume growth going forward in the entire value chain of infrastructure development. And as I was mentioning, 2025 will be the year of focus towards cost optimization and profitability increment. And based on that, what we believe that there is an increment in EBITDA per ton opportunity for all the cement players, especially the Ambuja. What we believe that margin to improve up to 19 to 20% by FY26. And based on that, what we believe that currently stock is trading at a very reasonable valuation. Once the market is with every incremental quarter, when we see the news flow towards cost optimization and EBITDA per ton, there will be an increment in the interest towards the cement as a cycle. So what we believe that 2025 will be a structural play for the CV for the cement industry. And what we believe that under cement, Ambuja provide a solid investment case with a target price of 675 with an upside potential of 23%. The next stock is very interesting stock, which is into premium consumption or the fastest growing consumption space. That is DOMS Industries. DOMS Industries is catering into the stationery space, a organized stationery space, which space is growing at a very faster pace. We believe that this stationery market likely to grow with the CAGR of 13% from FY23 to 28, reaching the total market value close to 71,000 crore from current 38,000 crore market by which is in FY23. A huge potential for this market to grow from the current level, and the organized stationery space is a solid space in which the DOMS industry is catering. It's a solid structural story which will continue for next couple of years, next at least for 3 to 5 years. And right now this company is catering to only 1,22,000 outlet. This company has a potential to reach up to more than 3 lakh outlets in next 3 to 5 years. A huge potential is available to grow from the current level. Right now, whatever the company produce, they are able to sell into the market. So the utilization level is very high for this company. The margin profile for this company will continue to be in the range of 17 to 18% in next 2 to 3 years, with increasing capacity utilization, a solid operating leverage case, improving product mix, scaling up faster growing pens and the bags category, stable raw material of the prices, and improving on ground execution, which makes a solid case of investment for next couple of years. The ROE profile for this company is continuously improving, and we forecast 20.6% of ROE by FY27. We project 3120 target price for this company in next 1 year with an upside potential of 22% from the current level. The next company is again into the premium consumption space, a solid premium consumption space, which is Ethos Limited. Ethos Limited established in 2020 to 2003, which is India's largest luxury and premium watch player. 20% market share into the luxury segment and 13% share into the premium watch segment. As I was talking, Indian GDP is continuously increasing. Very soon we could be reaching a 5 trillion economy, and by FY 28 to 30 we would be having a 7 trillion economy. With this pace of economic growth, the luxury segment continue to grow at a very faster pace, and this comes as a structural investment story for the watch segment, which is again growing at a very faster rate. We believe that India's luxury market will expand by 5 times in next 1 decade, based on number of affluent customers continuously multiplying with a higher aspirational growth in the Indian equity market. This is a solid play of watch in the luxury segment, in which the lifestyle division will be the next growth driver, in which company is opening into the lifestyle segment on top of the current watch segment. What we believe that there is a solid opportunity for this company to grow from the current level as the market leader. What we believe that this is the only company available in the listed space for the luxury watches, and that number is continuously growing. What we believe that for the current quarter, the volume growth is likely to be a very solid for this company, led by a solid wedding season. This particular quarter, we have seen that the number of wedding days are very high as compared to last year, and the demand from the wedding segment is continuously increasing, and Ethos provide a solid space into that particular category. Room for margin and ROE to ROC to expand further going forward. What we believe that EBITDA margin could improve up to 60, more than 16% from the current 15% in next couple of years, with gradual increase in ASP and exclusive brand portfolios, strong expansion and operating leverage, and increasing CPO business further improve the ROCE from 13% to 19%, which makes a solid investment case for long term for 2025, with a target price of 3750, which provide an upside potential of 20% from the current level. Next is Bharti Airtel. So Bharti Airtel is a Nifty 50 stock which is catering to the telecom space. We like Bharti Airtel as a telecom theme, and Cipla as a pharma theme, as a defensive play for 2025. What we believe that the price war in the telecom space is now behind us. Now each and every player into the telecom space is targeting towards the profitability, which is considered as a ARPU, which is average revenue per user. So ARPU for Bharti Airtel is currently at 233 rupees, higher than the competitor, which is at 195 rupees. What we believe that in next couple of years, the company is targeting a ARPU of 300 rupees, and with every passing quarter, we would see the increment in the ARPU story, which will be a solid operating investment case for this particular sector to grow from the current level. Huge revenue and profit growth potential, stability in other segment, moderate capex and constant optimization efforts. What we believe that despite of the 5G rollout, company does not anticipate any significant capital expenditure on immediate basis. That means that the operating cash flow likely to be better as compared to the previous year. A solid growth potential, moderate capex, higher ARPU opportunity, and solid migration of customer from aspirational customer towards 4G and 5G from the current 2G is a solid growth path for this company. What we believe that the pricing war is behind us, and now the entire sector is targeting towards the profitability, which makes a solid investment case into the Bharti Airtel as a defensive team with a target price of 1880, which provide almost 18% upside from the current level. At last, we like Cipla, which is again a large cap player. We like Cipla as a pharma theme, shining USA base, growing domestic demand, and upcoming launches. Despite the further upcoming launches, set a solid investment case into the pharma space, in which we are seeing the pricing war in the US market is now bottoming out, and what we believe that the Indian pharma company will provide a more margin of safety in current volatile environment. A solid ROE expansion opportunity with almost which provide a good margin of safety in the current market environment. We set the target of 1735 for Cipla for next 1 year, which is almost 17% upside from the current market level. What we believe that Cipla and Bharti Airtel is considered as a defensive pick for 2025, as a defensive play under pharma and telecom as a telecom space. And what we believe that with this new year picks, one can sell through the market volatility of 2025 with more a larger extent, because the theme of this particular report is focus more on earnings play to drive the growth of 2025. With this, I am ending my presentation. Happy investing. Once again, Happy New Year to all of you, all the readers, and all our listeners. And I wish you once again a Happy New Year, happy and prosperous New Year. Happy investing and Happy New Year. Thank you so much. With this, now I am handing over the call to the moderator.
Thank you so much, Neeraj, for those were truly profound insights. I'm sure our audience is feeling empowered and inspired to take action and move closer to achieving their financial aspirations. Wishing you all a happy and prosperous new year filled with success and abundance. Thank you, guys.